All right, guys, we are back and we are talking tariffs. We're talking the trade war. We're talking about all the stuff you've been seeing all over online. A lot of thoughts here. How is it going to affect real estate? How is it going to affect you? And how should you be investing? At least I'll share the way that's working for me. So, first off, stocks and the market in general is not judged by a multi-day event. The amount of things that I have seen online, and I don't care what your politics are. It doesn't matter to me. There is no point where you look at a drop, however massive, and say, "Oh, well, one person tanked the economy. It's all over. Retirements are wiped out." It's not lost money. Here's how the stock or any investment works: you buy an asset, it goes up and down in value over time. Now, if it goes down, typically you buy more of it. As it goes up, that may be a time that you look at exiting and selling. This is not just deleting people's retirement. And lo and behold, between the time I scheduled this video and the time we're actually going live, we're basically back up to where we started last week. We're down like 1.5% from 7 days ago. Turns out, not that much damage done, if any. Let's talk about the actual trade thing and what it looks like, though. What we did, Trump came in and launched some sweeping tariffs. First of all, the calculation, I think everyone from both sides agrees, was pretty much bogus. It was a weird calculation on how we're doing the tariffs. Number two, the way that it was executed of, hey, let's just slap these all on all at once, that shocked the market in a way that it really couldn't handle. We saw that come out here, which is what caused all the volatility. Now that we've backed off it, we've extended 90 days. The economy seems to go like, oh, okay, this is all fine. Interesting things we found throughout, though, and this will affect real estate directly. A lot of trade partners actually came in and said, hey, let's go ahead and work a deal. And we started the conversation on a lot of deals. I think net, it's actually probably going to be a positive thing. We're keeping tariffs in place on China, which I am absolutely a fan of. They are infamous for not playing by the rules. We should enforce that. Let's get everyone to the table, though. I like the concept. I really do. We've been screwed on trade for a long time. Now, this is personal opinion. I don't care if you're left or right. It doesn't really matter. But the way that I see it, there's an imbalance. Stuff will get negotiated. I do think that we need to do something to mix things up, which is what I think Trump's doing a pretty good job of doing. Now, in this case, he may have overshot. We have now corrected. Markets have stabilized. The story here, though, is the markets do not only depend on one person's decision. And ups and downs on a multi-day, it's like, oh, it's been about a week. It's been 5 days. It's not even done in months. You look at investments over the course of years, which is a strategy that we've adopted here in Multifamily Strategy, long-term cash flow and fixed rate debt. Now, where people felt a lot of stress, a lot of pain, a lot of people believe in the stock market. If you're watching this, you could be one of those people who are like, hey, I've been told the stock market I'm going to put my money aside there. It's going to go up and up and up. It is not a savings account. It is not a high yield savings account. It is an investment account. And most people, retirement plans, vast majority, are in stocks or portfolios owned by a Vanguard or a BlackRock, massive mega companies that do not care how your portfolio is doing at any given moment. I don't care who's in office. You don't blame the president of the United States for your portfolio taking a hit. If you put all of your eggs in the stock basket, you're like, oh my gosh, all my wealth is wiped out. Well, you probably made a lot of that wealth over the past multiple decades with ups and downs in the markets. They weren't made overnight. They don't get wiped out overnight either. You lose when you sell, you gain when you sell, you hold until that point. Works the same way in real estate. Now, here's what I do like about real estate and businesses and other such assets. Assets that pay you, that you control. All of my properties are on long-term cash flowing fixed rate debt. Here's what happens. Stock tanks. My costs are the same. The rents are the same. My paycheck doesn't change. I feel none of your stress. When bad stuff happens to the real estate market, like we saw the last few years with interest rates, guess what? My interest rates are all custom, and they're all locked in on long-term debt. The market changed. My portfolio didn't. If you are really stressed about this, or you're like, man, I really don't like what the market's doing here, I highly recommend taking some control over your investments and buying where they cash flow. That cash flow can get you through a lot of stuff. This is not just Christian sitting here advocating for real estate. I'm saying if you put all your money in the stock market and you personally are feeling stress when we see it take, a 10, 15% dip and then spring back, if that causes you anxiety, the cure is to get stable cash flow. If you want to hit retirement, stable cash flow. Dividends and stocks, that's not a way to retire. That is a long play to build equity. That in general, it's a lot better idea than trying to throw it into a savings account. But if you treated it like your money before you sold, zero sympathy here on this channel. The country and the world and the individual business and whoever's in the Oval Office, none of them really care what your personal portfolio looks like. You should take some ownership of that if that's something that is stressful or important to you. Buy cash flowing assets, not just real estate. You can own businesses. There's a lot of different paths to cash flow. Own that cash flow. If it goes down, you have no one to blame but yourself. In this case, I'm not a big fan of all the posts going out saying, "Oh, Trump killed the economy. We need to impeach him." It's been 4 days. Chill. And then, of course, today sprung back. I don't think we're going to see any post about, "Wow, Trump saved the economy." It just went down and went up. It was a bad decision. They reversed the decision or delayed the decision. I think we're going to be fine. Now, what do tariffs actually mean for the economy? Because I think this is going to be exciting. Temporarily, while a whole bunch is up in the air, where's manufacturing going to come from? Are we actually going to go all the way with China? These all affect material cost. And I don't think many people realize how many materials that go into building and homes actually do come out of China or some of these other areas where we have a lot of pressure. If we see a rise in cost here, which we very much expect to, there's going to be less building. What is one thing that we are terrible at the US? We are underhoused massively, especially around our big cities. We do not have enough housing. With a housing shortage and a material cost increase, prices continue to go up. If you hold real estate, it's a great time to hold. What else happens? When you have trade negotiations, when you have a volatile market, the 10-year debt yield goes down, which means there's now downward pressure on interest rates. If you buy now, if you rush into the market now, you score some points, you get some real estate on the board, prices should continue to drive up over time. Unfortunately for our tenants, when the costs go up, the operating expenses go up, rents are going to keep going up because there's not a supply issue. Well, there is a supply issue, but it's not an oversupply issue. As far as us landlords are concerned, our assets become more and more valuable. With lowering interest rates, this means, hey, we can buy now, we can refinance later. This is great. I had planned on potentially 1031ing some of my smaller buildings. Now, if rates continue to drop, I may just be doing a cash out refi, hold my entire portfolio, pull money out of it, and go buy more properties. Now, we're still seeing people lose their real estate from the past rate hike. There's still debt coming due, and there's still people losing their businesses. It's an interesting time in real estate. We're able to negotiate and do some cool discounts. Creative finance is at its prime right now because there's actual pressure on owners who overpurchased, who made bad decisions, who were bought on variable rate debt. That's still in play right now. The discounts are still there in the market. They'll be disappearing. We have upward pressure on price by increasing the cost to build new inventory. We have downward pressure on interest rates. When I am looking at this as a buy and hold investor, this is excellent. Now, if you want to be buying a ton of properties over the next 10 years, it could get really expensive a few years out. If you've been sitting on the sidelines waiting, like, hey, when is the time? I actually do make the argument it's probably right now because it's not going to get cheaper. In fact, it will start getting a lot more expensive. If you already hold the inventory or you buy throughout this year, I think you're going to be in a really good place. By the way, follow this channel. It's a great place to learn more about how to do that. If you guys want a free community to join, by the way, check out the Multifamily Strategy free school community that is out there, that is live. I have calculated all sorts of fun resources for you guys completely for free. That is not a paid course. That is not some magical funnel for you to buy stuff from me. That is a place where people get together, do real estate, make money together. If you're trying to get into the game, highly recommend you check that out. Those are my main things. In summary, don't freak out about the economy. It's a major dip. We don't need all these crazy posts and political agendas. Markets go down, markets go up. If all of your eggs are in the stock basket and you have no control over your future, I highly recommend that you fix that. Timing for real estate, I'm very excited. I'm very excited. as we see the pressure on the interest rates, I bought a lot of stuff on custom interest rates, and I got started when rates were like 3 and 4%, and they went up to 8. They're back down to high sixes, maybe mid sixes, depending on what deal you're looking at. When I'm looking at real estate, I'm looking at investing today. All my deals work in cash flow at today's bank rates. In fact, they cash flow incredibly well. If we can lower that by a few points on hundreds of units, I stand to make a lot of money in this economy. However, this is only made for those who buy and hold for the long haul. This is why we do long-term cash flowing fixed rate debt. This plays really well into the strategy. So if you've been following the channel for a while, you've bought some of your own rentals, congratulations. I think you have made a very good call. Now, I'm going to answer some questions here from the chat. So if you guys have any questions, post them below and off we go. I have one from Oscar. We'll see if we get any more here. He's just saying thanks. There's actually no question here. So Oscar, thank you very much. I appreciate that. I don't usually talk politics often on this channel. It's actually a point I make to not get too political. I would feel the same way if we were all freaking out about a different presidency. So say this was Obama or Biden or whatever era you wanted to call this. I would not look at a stock market dip or a small blip on the radar and base all my commentary on, look what happened. They ruined it. It's all over. The sky's falling. Guys, this has happened for a long, long time. It causes panic selling. These last few days, some very rich people got a whole lot richer. They came in and bought at some discounts. They got this quick 10% discount. Boom, market's backed up. This type of stuff happens, but if you try to buy the dips, you're doing it on a day trading or weekly trading or even a monthly basis, you're not playing the markets correctly. Find a strategy that allows you to lock in and follow the long-term trend. What happens in your given asset class that you've mastered? What happens in that over time under different market situations? We're trying to hedge for inflation. Real estate does really well. Trying to stack cash flow. Businesses actually out cash flow real estate in most cases, but do they preserve value? No. Having that real estate basis, having an actual physical building that has inherent value. That's why I love real estate so much. You have that long-term appreciation from just having the asset, the intrinsic value, and you also get cash flow. But you can stack it with businesses. You can stack it with real estate. Cash flow is what you optimize for there. You want to just optimize for hedging against inflation. You look at something like silver and gold, but again, you have the same project or the same problems. They don't cash flow. We like cash flow. Cash flow is good for you. With no further questions and a good quick commentary here on the economy, or at least I think valid points. Let's not freak out. Let's all keep our heads. Let's go make some money and recommend you go buy some apartment buildings. See you guys all in the next episode.